Well, I've got my new co-host. All right, this is your second week, Jeff. Jeff Lutz here to help us celebrate Good News Wednesday. And this particular Good News Wednesday, we've got a lot of good news to talk about.
Absolutely.
So, Jeff, there's a new narrative that's been developing, I would say, for the last week and a half in the market. The narrative was, and then it was put in stone today. The narrative was everything's fine and it's going to get better. There was some comfort in the certainty. The VIX was at historic lows. Every day it seemed like it would go even lower. And now the Fed has confirmed what the market believed. Everything is just fine. Let the party begin.
Yeah.
And the analysts at CNBC, they were absolutely giddy. It was crazy. They were just coming out of their skin.
Yeah. Yeah. It's a good time to be invested. I mean, if you've stayed invested through this, you've got, the S&P now at 4,700, closing over 4,700, NASDAQ strong, the Dow's at an all-time high, I believe. So, if you started it from the beginning of this year to now, you really couldn't have asked for anything better. You've had, basically inflation come down from, mid last year at 9% to effectively, 3% now. And if you look at the housing component, that housing component runs 2 or 3 quarters in arrears. The way they use that data, that owner's equivalent rent data, if you use more of the high frequency data, you've basically got a 2 in front of your inflation number, maybe even lower.
Yeah, and it was interesting. Chair Powell keeps on talking about the 6-month number. I keep thinking I want to look up where that 6-month number is available to see. I'm sure there must be somebody out there that has that 6-month number available.
Yeah, Nick Timmeros on X. He's a reporter, kind of known as the Fed whisperer, and
Okay.
he reports on the 6-month number. I'm sure it's somewhere here. But yeah, he right away, as soon as the numbers came out over the last couple of days, he reports out on 3-month and 6-month numbers.
I see.
So yeah, he's a good follow for that.
Yeah, that's a good one to know. All right. So the decision today came down, the complete change in their position from 12 days ago. 12 days ago, they weren't even contemplating cuts. And then all of a sudden, almost the entire board said, yeah, we're going to need to cut in 2024, and we're going to need to cut at least 3 times, apparently. They left the rates unchanged, of course, for today, and pretty much put a cap on it. Pretty much, if they ever raise rates again between now and forever, I think people will be shocked out of their minds. And then they see median projections shows 3 rate cuts. The Fed says the growth of the economy has slowed. Well, yeah, you're not going to keep it at 5.4% very long, like it was in the third quarter. So that's not a terrible shock. Then they see the growth dropping to 2.6 for the total of 2023, and then dropping to 1.4 in 2024, with employment creeping up to 4.1. Doesn't sound bad.
Yeah, and there was a reporter that asked a question that says, "Hey, last time, or I think in July, Chair Powell, you said that you were going to have to cut. Well, before inflation gets to 2%, you're going to have to pause and then cut. And are you at that stage now?" And it was a good, like, kind of in your face question. He acknowledged. He goes, "Yeah." He goes, "If you don't do that, then you risk over tightening." So he definitely acknowledged that, and that's the thing I'm a bit worried about is the lagging housing data. It's at like 6.5 to 6.7% year-on-year inflation. So the way that they look at the housing data, and there's economists that are reporting that they believe it's going to come down 400 basis points in 2024. So now you're going to have this thing that's up at 6.7 come down to 2 in the 2s. And when that happens, I mean, you can really have the bottom. It's 30% of the CPI, and you really could have the bottom fall out of inflation. So they really got to get ahead of this before they destroy the housing market and they destroy other pieces. The other thing is, you've had, I think unemployment got down to 3.3 or 3.4 at some point this year.
Mhm.
Yeah, I think there's been about 7/10 of growth in unemployment throughout the year. And um, so I think the Fed overall, I mean, if you look at it on paper, they've done a decent job. They don't really show a great ability to forecast or any confidence in their own forecasting. But, if you were to start in the beginning of this year or even start a year ago to where we are now and to say, okay, you've still got sub 4% unemployment and you've taken inflation down to the low threes and you haven't, you had a banking crisis, you've averted it, and, and you still have, over 2%, growth GDP. I think if you said like if you were to ask for that in the beginning of the year, I don't think anybody thought we were going to get it. I think in the beginning of this year, I think everybody thought we were entering a recession in the second half of this year. And of course that's been pushed off.
So, except for the people on my channel who listen to me, and I've said all year long, inflation was over and we weren't going into a recession. I've said it since the beginning of the year. I was, everybody else was on the other side of that. Others, even Elon and Kathy, Kathy Wood were on the other side of that story. And I said, I can't. Part of it, though, is maybe we talked about this last Wednesday. I don't know, is I've been through a lot of boom busts. And this looked to me, I mean, and they talked about it again today in a lot of the commentary. What we went through was transitory because it was a boom bust. And eventually, all of those aspects that were caused by COVID are going to play themselves out. And probably if the Fed had done nothing, maybe raised it a couple of points instead of 5 points, they still would have gotten this result because you needed to get to a place where you no longer were worried about whether you could get a container out of the port or not, or even find a container to put your stuff onto. So it was a very, very difficult supply chain situation. It was going to work its way out. It always does. It's a matter of how long. So anyway, I can go back to the record and prove that I've been saying all year, inflation is a done deal and no recession. So now we're looking at possibly, they think it'll come down to 2.4 by the end of 2024 and 2% in 2025. I think this will not age well.
Yeah. I think they're behind. And I've been with you this whole year too. I've not been predicting a recession. Even if there is, it'd be something super, like some super small dip, but nothing, prolonged or nothing big. And I've thought inflation's been behind us for a while as well. So again, this comes with this lagging data. And again, we spend a lot of money. There's a lot of PhDs at the Fed. We spend a lot of money on this department. Why we can't have more high frequency real-time data versus people wandering around with clipboards in grocery stores and using, owner equivalent rent for housing data when we have all this stuff online with Redfin, Zillow, and so forth. It's beyond me, but this will speak to their ability to forecast in the future. And that's the problem. If we don't fix this issue, and we fix their tools, we're gonna start something late or like we did here, and we're gonna maybe go too long again. And I think that's what I think the country needs to focus on. I mean, we need to get that inflation down further. It's no fun having prices still go up. Everything you bought, 3 years ago is about 20% more expensive than it is now. But yeah, to do all this over time, by the way, they've done, I think, over $1 trillion of quantitative tightening, all the while. So it's not just the rate increases, it's also been quantitative tightening on the balance sheet. So yeah, it looks like we're in a transition here of, we're done hiking. And the question is we probably didn't even need that last hike,
right,
that we did. So when you're 4 or 5 months now on pause, you should just say like, we're done. Like it just seems like we're going into each meeting and kind of just playing it by ear. And it's giving them kind of, given the option, but there's really, even in some of the last economic data points, there's nothing that, even Powell's prior speeches a week or two ago, even some of the things he says, like the markets aren't, they're not overreacting anymore because they've made their decision.
Yeah, and the other thing that drives me crazy, of course, and I don't remember whether you and I have talked about this yet. Certainly my audience knows that this is a couple of my hobby horses. One is that I don't think the Fed doesn't appear to be taking into consideration the demographic change. We've got an aging population. All the wealth is in the hands of people over 55. People are aging in home. They're not going to sell, even if the rates do come down, because they want to stay in their house. You've got to start taking into consideration this difference in who's holding the money, how they act. They don't spend money on the same things that people in their 30s do. Obviously, people in their 50s and 60s, and they don't invest the same way as people in their 50s and 60s. And when you have that much wealth, you also don't invest the same way. And so,
great point.
So all of this is having a huge, I think, impact on where the money is. And one of the pundits today was finally saying, the short-term bonds are a huge buy right now, and that's where the next big increase is going to come. I predicted the 10-year was going to rally about 2.5 months ago. We've had this massive rally in the 10-year. Now we're going to we had a rally today in the 2-year. I called that a week ago, and now it's going to go all the way down into the 2 months and the 1 month and the 3 month. Those are all up today and up in the pre-market. I can't figure that out at all.
Yeah, I think November in the bond market was one of the best months in
Ever.
4 decades, I think.
Yes.
So
interest rates came down the fastest they've ever come down, I think.
Yeah. So we're good. I mean, I think this is small caps had a great day. I think this is what we need. I think, again, if you take this now to Tesla, right? One of the big overhangs on Tesla that Elon is somewhat imposed, but the market is also imposed of, like, if interest rates are high, people will buy less of these, $40,000 objects. So hopefully now the market will see this and start applying some love to Tesla.
That would be lovely. Of course, they should be they should be showering love on Tesla right now, because history is made today in the Dow. I mean, in the markets. This is being called like the transition day. This is like the day everything changed. It's being compared to a year and a half ago or so when the change was made to start tightening. Now we've got the change where things are going to be going towards lower interest rates. But Tesla first has the historic change around the Cybertruck. The market still doesn't get that. And part of the reason they don't understand how amazing the Cybertruck is because nobody's reporting it in the mainstream media. I mean, nobody. You got it
Right.
in the new media. It's all over the place in terms of how amazing it is, but not in the mainstream media. And then, of course, last night we have the Generation 2 Optimus come out. What were your first thoughts when you were watching that video?
Yeah, my thoughts are, I'm trying to think of this in a mass production mindset, and it looks like they're getting closer to design lockdown, and design lockdown then can yield to them going out for tooling, more production tooling and getting this thing into production. So I see what they revealed there. It kind of felt like there was going to be another version of the robot coming. And this looks like a major uprev. And from there, it looks like now you see the hiring that's happening in Nevada to get the stand up the line. So, these were probably being built, in some fashion, but either between Nevada and Palo Alto, so that they stand up a real line. They can get more proto samples out. They can really start accelerating the testing on the program. And these are the kind of things you do as you get to the later stages in development. You expand the amount of hardware out there and the amount of your test plan that you're going to run. So for me, my reaction was, it looks like we're getting closer to something that they can signal the suppliers and put into mass production. And and they took a bunch of weight out of the product too, which we know that helps on the battery size. It helps on power consumption. It obviously helps in a number of different areas, logistics. So there's a number of things that helps with. So I was really impressed with in the improvements, right? These are Tesla actuators. Now you saw what the hands are able to do. That video wasn't edited in any way. And yeah, I was thoroughly impressed. And again, I think the way, even Elon made a comment of, like, by next year, it'll be threading a needle. So they're just going to continue to improve. But my guess is at some point they're just going to drop a line and say, all right, we're we're going to draw a line here. We want to put this version into production. We want X number of them. We're going to put them in our factories, and we're going to start deleting these tasks and converting them from human to bot, and then take it from there. And that's the greatest environment for them to do their field testing, and is their own factories.
Sure, absolutely. And of course, then they have their customers as well. They can be suggesting to their customers, since they work so closely with their customers anyway, they would know exactly where the bot would do the most good with a lot of their first tier and second tier customers. I was suppliers. Did I say customers over and over? With their first
suppliers,
and second tier suppliers, they know exactly where the use case would be best for them. Have you worked with any company ever that works this closely with their top tier suppliers?
It's hard to gauge that. I mean, in the consumer electronics industry, there's a very, very close relationship, especially on the mobile phone side, because there's a lot of compliance that needs to be done. So you're basically interweaving your supplier quality effort in with their outgoing quality effort, and you're pretty closely aligned. Your development teams are aligned in roadmaps. So, but I imagine Tesla is taking that to a whole new level. And I think suppliers of Tesla need to realize, like, they either perform, or Tesla's going to come in and probably do the part themselves, and cut them out of the business. So there's an interesting side of it, but I think Tesla actually treats their suppliers very well. I think suppliers are very excited to get a Tesla award, because all Tesla does is take their volumes up in everything that they do.
Right. Yeah. No doubt. So, I've been the optimist all along. Maybe we won't have 100 or 500 or 1,000 by the end of the year. Maybe we already do have 100 or 200 that are out there playing around. We don't know. We maybe never know. But it wouldn't be, I don't suppose, surprising to you at all if there was an actual production by the end of 2024.
Yeah, I mean, I would, the fact that they put those recs in to get that line going 3 or 4 months ago, tells me, and it takes 4 to 6 months to get staffing. I'm sure they're going to do a bunch of internal transfers too. But yeah, it seems reasonable that they could get a line design going and get something stood up at X% rate of a production line. I think the first thing they want to stand up is an MPI line that can build prototypes more rapidly, and then and get more bots out there for testing. And then I wouldn't be surprised, if this is a great question, like if we're in a setting with the Tesla executives, it was like, what you showed on the screen, is that design lock? Because Elon, on the Cybertruck in 2022, he did admit in an interview, like, hey, we're finally at design lock on a Cybertruck.
Right.
And essentially took them about a year to get to a release candidate. And so if it would be great intelligence to know, like, are they design lock on the bot? Because on the bot, they've got to go they got to send signals out to silicon suppliers, long lead. I mean, they had to do that too on the Cybertruck, especially for the new 48-volt architecture. But that would be the long lead thing, is to get the silicon planning and get that going for supply. But I would see smaller numbers in the beginning, and I would see them wanting to do this application testing in their own factories and getting data, and then you're right, maybe expanding out to some of their suppliers.
Yeah, the other big deal is the thought in, thought out. I hope this is not the onset of, that old age problem, AGE. So let's turn to the market action on Tesla today. So Tesla eventually made it into the green today, and actually ended up kind of in the middle of the Mag 7. Some did a little better, some did a little worse, but it did come short of beating the NASDAQ, but it had been down early. What in the world happened with Tesla today? What do you think?
I always say it's hard to call like single day events, but there was a lot of bad headlines this morning about the quote unquote recall that they'll, resolve via software. And that gets algos triggered, I think, and it gets selling pressure started. I think there's options activity. I think max pain was somewhere around 227. So I think there there was momentum trying to drive it down from an options perspective. So you have it's a heavily options traded
Sure.
stock. It's a heavily news headline traded stock, and it's just a heavily traded stock overall. So I think the early headline pressure didn't help. Um, but as obviously when you have that kind of news from the Fed, and you have a very interest sensitive rate product, and you see interest rates go from whatever 4.2 to
Sure. Yep.
4% on the 10-year, in the course of a couple of hours, that should give a pretty big boost to a company like Tesla.
Yeah. So
Should have
maybe
been
it's,
up higher.
I would think, I think so too. And maybe it's pent up demand. I mean, maybe there'll be a pent up story tomorrow, although we're not seeing it in the pre-market so far. So one last thought on the market, which I knew there was something else I wanted to talk to you about with regard to the broad market. Some are now saying that actually I've been saying, I wrote down, some are now saying, oh, I know what it is. Some are now agreeing with me because I started talking about a rotation about 4 weeks ago. And nobody was talking about rotation. And it's like, we got to have a rotation. The NASDAQ and the MAGs, have gotten all the glory all year. And at some point, you got to have rotation. Some of the pundits are now starting to talk about the rotation, but I thought one of them was particularly wise this morning. Maybe it's completely wrong, but he's talking about it'll be a rotation. So yes, the Russell and the S&P and the Dow will all do better than the NASDAQ, or at least equal to the NASDAQ, instead of the NASDAQ doing so much better as it has all year. But that it's not going to come out of the NASDAQ. It's not going to come out of the Mag 7. It's going to be coming off the sidelines out of cash, because cash now is over. Cash is not the place to be now.
Yeah. So, I mean, it's hard to really gauge because you have all these different factors. So you had mutual funds balancing at the end of October. You have this tax loss selling, which I can't imagine there's a tremendous amount of tax loss selling in the Mag 7.
No.
When you see how much they've moved up this year. But yeah, it's really hard to predict. But when I look at companies like Nvidia, and I look at they get cheaper after earnings from a forward PE perspective, and that's going to be a big lift. And you have companies like Google, so I can't imagine that it's done for tech and the Nasdaq. The Nasdaq was all time high. I think was in the 16K range, so we're still 20% below that,
Right.
and have room to move higher. So on the commodity side, I mean, we don't really have a full recovery in China happening at this point. And so I mean, if you look at the Bloomberg Commodity Index, still most of the commodities are well below their 200-day moving average. So those are going to be interesting things to watch. If we have this big move on demand, and then we can get commodities going in the right direction again. But right now, you still have PPI. You have China PPI that's in deflationary.
Right.
And you have the U.S. PPI that's basically zero. So I think the next couple of months are going to be really interesting. I wouldn't want to be out of tech for sure, but I think it's still a stock pickers market for the most part. For Tesla, Elon's got to take the lid off of the company. He's got to, right. We've had 3 earnings calls in a row where he's kind of put a lid on things, and he's been right in some areas in terms of pressure on the consumer, where are rates going. Well, now the Fed has pretty much clearly signaled where rates are going. So I think Elon's got to respond. I don't think he needs to wait until the 3rd week of January to do that, by the way. But I think he'll see 3 weeks of sell through data, right, with the point of sale credit on the IRA in the US. I think he'll see some information, hopefully, and we'll get a more upbeat outlook. That's going to be the big thing for Tesla. I think the markets will even look beyond the P&D report in the first week. They're really going to be like, the street, I think, is at 2.2 million for 2024.
Right.
And if they're anywhere higher than that, which I hope they are,
Yeah.
Well,
they certainly have the
it's off to the
capacity.
races.
Yeah, they certainly have the capacity. The question is, what will the call be? Actually, I think the street's at 2.1, not even 2.2.
Yeah,
So,
maybe rounding up to that, but yeah, it's somewhere in that area. It's a low number, and that's going to be Tesla is going to set the pace really for EV adoption in many, especially in the US with all these competitors pulling back. So that'll write the ticket. I mean, if you look at EV adoption, we're at 8. I think CNBC last week called it 8.7% adoption
and,
in the US.
and
But
close
say we're at
to
8. Yeah, say we're at 8, and then we go to 10 or 11 or 12% in the US next year on a basis of 15 or 16 million cars. You're going to go from 1.2 million EVs in the US to 1.8, 1.9 million. Who's going to build those 700,000 extra EVs when GM and Ford don't want to build them? Because the more EVs they build, the more money they lose. Same for VW. Rivian's still, I mean, they'll grow their volumes, but they're still losing a tremendous amount per vehicle. So I just think Tesla's put the capacity in to soak all that up if that EV adoption is really going to be there. And I think it will. I don't think the data said if you look at the last 3 or 4 years by quarter of EV adoption, there are several quarters where it slows down, but then it just picks back up again, and it keeps going up and to the right. So we live in this 24/7 news media cycle where it's like nobody wants EVs, but they're just looking like intra-quarter or 1 quarter of data, and it's slowed from 70% to 40% EV adoption rate. So you got to look at this over a longer time period, and the movement is up and to the right.
Yeah, I couldn't agree with you more. And I was thinking about it today that Tesla will be at almost 6% of the total car market in the United States this year. And if they grow at their normal rate next year, they would be close to 9% of the total US car market next year. And then from there, and then the next year we'll have the Gen 3 vehicles in mass production. They could be at 13, 14%. So it's the numbers are crazy, and I just don't know what the market is thinking. I don't know where they are when they have, and then they have this opportunity in the robot and in the robotic cars to have basically an option for that by being in the stock that already has just an energy and auto. You can justify the price of the stock right now and higher than it is right now. And then you get these other things added on top. It just drives me nuts.
Yeah, there's great value in the stock, but don't listen to us for investment advice, but do your own. But what other tech company that builds this kind of is growing at this rate? You can count them on one hand. Yeah. And it's NVIDIA is for one. It says tremendous growth. I think analysts tend to overshoot in both directions. So there was big projections in 23, came in under from an EPS perspective, obviously, and then they tend to overshoot on the downside, and then they kind of are late on the upside. And that's the thing I think that people are missing with Tesla is markets are forward looking. So we're already in December of 2023. At some point, these markets are going to be looking ahead and even past 2024 in the 2025. You're going to have a year where Cybertruck's ramped. You're going to have a year where the Gen 2, this new Gen vehicle is going to be in mass production. You're going to have full self-driving at some level of greater maturity, more useful maturity. So
robots.
Yeah. And you're going to have robots in some greater level of maturity, maybe already in factories. Doing some work. So when you fast forward just a year out, that the pace that this company works at, there's only a few days if you get in and out of the stock where you can really blow yourself up.
Right.
So
Jeff, now let's be on the board. We're not on the board. We're in the marketing department over at Tesla. We're sitting, in a room with Elon, and we're going to brainstorm. Because I know he's clever enough. They figured out a workaround in Sweden today with regard to those license plates. I don't know if you saw that, but they basically said, well, we'll just lease the cars to these guys, and then they can go get their license plate. We won't have to pick them up at all. So they worked that around. I think they should be able to come up with a workaround about this in IRA $7,500 issue for next year on the Model 3. So one of the Model 3s qualifies. The other two have now a 0. because apparently the Biden administration is out to get Tesla. We'll talk about that in a minute more. So how could they redo this? How could they get more volume out of the one car? How could they maybe rejigger the cars? Do you have any ideas on that?
Well, they'd have to get more volume out of Panasonic, Nevada, and the joint venture there. I mean, that's ultimately what they would need to do. Um, you know, I mean, it does require more brainstorming. What doesn't make any sense is like a Jeep hybrid with a very small, like 7 kilowatt hour batteries, and they get a $7,500 tax credit, and Tesla's going to get a zero for I think one of the top three from a contribution perspective made in America vehicles. It's going to get a big, it's going to get a big zero. I think they could be looking ahead on things. I mean, the Mach-E from Ford also is going to zero. So I don't think it's necessarily targeting Tesla. I just think that when they came up with this bill on EV, the only way that this thing actually got crammed through is they added all this hybrid stuff at the end to throw a bone, because the automakers can't make EVs properly, and the 7500 doesn't even do anything for them.
Yeah.
And they don't have battery factories ramped in the US. That's the
Right.
other thing. GM is trying to they only have a few thousand Ultiums out of this Ohio plant. So, and then Ford has nothing started here. And they got the Mach-E being built in Mexico, which I know is a trading partner. So, yeah, they'd have to get more capacity out of Nevada to do this. The other thing is just change the economics on the Model 3. Let's get this new Model 3 ramped up in
Right.
North America. It should have lower cost structure. They should be able to charge more for it based on the features, and maybe change the equation on that, and get cattle to build a North America battery factory. I think that's got to be part of the Mexico factory solution, is getting some LFP built in North America. But these aren't short-term things, the last couple of things I talked about. So yeah, they'd have to get more out of Panasonic in the short term.
Panasonic's building 2 more factories in the US, right?
Yeah, but again, these aren't short-term things. So,
Yeah.
Tesla's already signaled that this credit could cut in half. I'd love to see the math of what happened overnight. What happened in the last 48 hours for it to go from 3,750 per car to zero?
Zero. Yeah. Well, you're saying that they're not being targeted by the Biden administration, but media, bloggers, CNBC pundits, all these different reporters of every kind of stripe, they've been told thousands of times over at least 8 years that when Tesla recalls something, it's an over-the-air update, not like a traditional recall. And yet today, the headlines were just everywhere. It's a recall. It's for 2 million cars. Every car Tesla's ever made is being recalled. Those were some of the headlines. Yeah. And sometimes they would say in the article that it was over the air. Sometimes even in the article, they didn't say it was over the air. To me, this has gone past negligence. This is intentional. And there's some intentional stuff happening with Biden's too. Let's talk about that in a minute. But let's start with the reporters. These guys are now out to get Tesla. This has happened since the Cybertruck. It had kind of leveled off. But once that Cybertruck hit, and it was such a massive, incredible thing, I think that they've upped the ante. They're going after them tooth and nail. What do you think?
I agree with that. I mean, in some respects, there's things happening that, okay, this can happen to other EV companies, like this tax credit thing. But there's other things where it looks like it's clear targeting. So I'm in that camp. I post about it every week, about just the negligence and the really just outright mistruths that are being told by the media on Tesla. And it comes down to just look where the money is. I posted yesterday, and a lot of this stuff has been pulled down from ChatGPT and Bard. But if you look in areas like Adweek and Statistica, you can see what the spend is from a company like Ford, for example, on CNBC and NBC Universal. And that's why they got glowing coverage for cutting their EV capacity. They cut their EV capacity. Their stock went up for cutting EV capacity. If they did that a year ago, their stock would have been down. And now they've collaborated with the big auto, big oil, collaborated with media to say, look, if you cut EV capacity, it's actually a better thing for these companies. economically, and the algos loved it and pumped their stocks yesterday. And it's a 1 day thing, but yeah, it's basically follow the money.
I saw an article. There was only 3 articles. I look at probably 200 or 300 headlines a day, maybe more than that. I mean, I'm looking at every single news source I can possibly find. That wouldn't count what I see on X. That would be just not X.
Yeah.
And there was only 3 articles, 3 in the mainstream media on Optimus today, based on that video. 3. And one of them was in like Tesorati, which, you would expect it to be there. But one of them, they wrote this. One was an inside business, I think. It was snarky. It was super snarky. Then there was another one, I forget which magazine it was in, and it was basically saying, if those videos were even true, etc. But okay, so you want to be a little kind of questionable on that kind of stuff, fine. But then they come down and they say the product was obviously not designed for production. And even said, as we've said before. What do you mean, as we've said before? The product was not designed for production. That's absolutely the opposite of true. And where would they get that idea to begin with? So is it negligence or is it on purpose? It just is nuts.
Yeah, it's follow the ad dollars, and it's also follow the political discourse that has changed now that Elon has bought Twitter, now X, and he's essentially removed the government from a private social media entity that the government was using to change how news was reported, and the censor things and to promote other things. And now that that's changed, that's a big problem for the government. I mean, those are the only two, I mean, these are 2 logical things, right? You have the ad spend, which is 0 from Tesla,
Right.
and then they have to protect the ad spend from a Ford and GM. If Ford and GM crater, there's no more money. Those are 2 of the top advertisers. That money flows into NBC Universal and CNBC, for example. Those are big time advertisers. They spend billions of dollars a year. And if that money goes away, those reporters you see on CNBC, those analysts, they don't get money. So
Right.
this is just like, where does the money come from? You have to, yeah. And there's some people that think that there's this big wall between the editorial side, the media side, and then the business side. And that is just not true. And if you talk to anybody that's inside the industry, it's just not true. And then there's just been, as Elon has kind of pulled the political discussion from one end of the spectrum to maybe closer to the middle, there's a lot of people that don't like that.
Right.
And so you have those things happening, and it's a target. And it's an interesting thing, because it's not like there's this big PR machine or something that Tesla has that they can respond to these things pretty rapidly. They don't really do that. The PR machine is Elon's 165 million follower
Right.
Twitter account, and sometimes he just ignores a lot of these things as well. So yeah, now you have people coming out. You have not whistleblowers per se, but you have the FCC commissioner coming out and saying, look, there's clear targeting happening here. And so maybe we'll hear more of that.
Yeah, well, we have heard a little bit more of it. Even today and yesterday, people saying it looks like, I mean, I even saw one actual analyst say that it looks like targeting. So maybe we'll see the worm turn a little bit here, because it's becoming so obvious. You can't pass the accident and not look. It is just this thing that they did with SpaceX and the
Starlink.
And the rural thing. I mean, Tesla is they're just so perfectly capable of doing what they needed them to do, and nobody else is even close to being able to do it. And yet they turned down they said, nope, you can't have this particular money that was due you, and that only weeks ago it looked like you were going to get. So and then that's where the FCC member came out and said, yeah, this is targeting.
Yeah,
it's crazy. Okay, well,
yeah. You can be on either side of the political spectrum, but you can just look at this, as an objective, whether you're an investor, you're a follower of the company, and of his companies, and you can see that there's clear targeting happening. And the question is, well, how do you deal with those situations? How do you make your voice heard in a respectful way? How do you get that out that, yeah, we're seeing this and we don't like it? And it's what's really disheartening is that you can just have outright corruption where there's a clear choice of like, what's the best solution for people? It would be getting that Starlink grant going. And instead the government would rather block progress and block something that would be good for its citizens in order to get at a particular person or entity that they disagree with. And so hopefully this turns around, especially as this political season heats up. I think having X spaces and having this thing just come out in the open very quickly. I mean, that stuff would have been censored maybe a year and a half ago.
Yeah.
Or it certainly wouldn't have gotten the reach
No,
it gets now.
that's true. Well, let's take a look at where the stock is right now and where the markets are right now. We've got Tesla just up about 0.05% in the after hours, so continuing the trend from the day, but not by much. So just a little tiny bit of a tickle up. If we go in and take a look at the bonds, we have got the bond sitting right at 4.001. So I haven't been watching it every second. Obviously, it might have actually flipped into the 3 handle in the pre-market at some point. Oh, there it is. As I'm staring at it, it dropped to 3.999. This is crazy. The 10-year is under 3.997. It's continuing to drop. So that's super interesting. The 2-year is dropped another 9 basis points in the pre-market. It is down to 4.388. So that inversion is starting to be collapsed. One pundit that I can't remember who it was, but who I totally respect, said that he sees that inversion reversing during the first quarter. Now, if that reverses during the first quarter, somebody that owns 2 years right now is going to make a lot of money in the next 4 months. So, and that would be true of the 3-year, the 5-year, the 7-year, all of those. But so interesting to look at this. The 6-month, the 3-month, the 2-month, and the 1-month are actually positive right now. The only thing I can think of, I did have this one idea, Jeff. So I'll run it past you, see what you think, is that it's really basically everybody's trying to get this long money right now. So it's dried up the cash available for the short money. Does that make sense?
That's possible. I mean, this could be kind of like that last run for that.
Yeah.
And it's certainly possible.
Okay. So anyway, a crazy day. I mean, you just don't have, if you're following this stuff all the time, there's only a few times when you have this much fun in the financial markets. Let's see. Okay. Let me look at the rest of these numbers here. We've got oil. Let's take a look what's happening with oil here. Oil is still sitting under 70. A lot of people are talking about oil could collapse. They're worried that the Saudi Arabia folks will do what they did 4 years ago when they just flooded the market and drove the price all the way down into the 30s. I don't think that's going to happen. That's my particular take on that. I'm thinking 67 to 74, that range for a very long time, unless there's some really big thing that happens.
Yeah, the only thing to keep an eye on is just China and demand. You'd have to have some sort of event occur that's kind of perpendicular to normal operating procedures for that to move meaningfully lower.
Especially because natural gas now is getting very close to a 5-year low.
Yeah.
It has been dropping like a rock all this week and late last week. It is now down to $2.34, $2.35, $2. If it gets under $2, we'd be looking at, 5-year lows. And so natural gas and oil, as you know, are can be traded off. They can be
right.
The use case for natural gas is similar to for oil, especially in plastics and some other places. So if natural gas is this low, that's helping to keep oil at these low numbers. Gold, of course, the dollar is dropping because the bonds are dropping. So the dollar dropped a bunch. So that means that gold goes up and other commodities have gone up. So copper's up, silver's up. So all the commodities are up as the dollar has dropped. The gold's up 2.56% in the pre-market. So that's
Yeah. And this should carry through to Asian markets, which are opening here soon, and we're already open. So, and then the Europe in a few hours.
all right. Let's look at the equities. The equities, we've got the Dow is up 0.22%, 81 points. We've got the S&P future up 14 points, or 0.29, and the NASDAQ future up 67 points, or 0.40. So the NASDAQ right now is acting somewhat normal in that it's out sprinting the other two. Interesting day. Any last thoughts, Larry? Larry, I did it again. See, I did it again, Jeff.
We're pretty close.
Yeah,
I can see the resemblance.
You're similar age and, similar industry, similar background.
Yeah.
Yeah. Almost everything is different, right?
Yeah. Yeah. No, Larry's great. I'm okay being confused with him. No, you can see what the markets did as soon as the Fed put their statement out. And as soon as they had the presser, it was kind of off to the races, and it was a strong close too. I think the other thing, it's not like it kind of sagged into the close. It kept going right up into the close. And I think we closed near the highs, or at the highs in several of the indices. So it'll be interesting to see how this carries through into tomorrow. Tomorrow's only Thursday. We have Thursday, Friday. So it'll be interesting to see. And if we get this, is this the Santa rally? Is it on now? Yeah. And where does this take? We had we're at 40, believe it or not, we're at a 4,700 S&P. Who would have thought that?
Yeah. And of course, my prediction was if we got all three legs of the stool, and we got it in spades, we really got all three legs, the CPI, the PPI, and the Fed, all three coming in fine, in fact, better than expected, that would mean that the second leg of the bull is definitely on, and it's on for the long term. So that's Randy's prediction. And then one last fun thing. We'll end on a fun thing. Elon puts up $100 million to fund a new school today. Another disruption coming?
Or distraction. I sometimes I get a little, but first off, none of us can work at the pace or understand how this man thinks. And sometimes we try to put our human norms on what his day can be like, and he just operates at a different pace. So I don't claim to be able to do that. But you had the restaurant, you had the restaurant announcements earlier and the progress on that. Now you have the university going. I just hope there's people in place that are doing a lot of the work behind the scenes here. I'd imagine there are. And he's made comments before of he's noticed a degradation in the capability of the new hires he has out of school. And
right.
And I could see understanding Tesla, the industry, their workforce. I can see them wanting to, and you have this whole new industry of AI, you have this whole new industry of automation and robotics in the US, which is, manufacturing robotics and manufacturing scale in the US has been absent for decades, essentially. So I could see him wanting to create an industry or create a kind of a program, a university program that gets people through the system that are capable of manufacturing when they come out, capable of doing real world AI when they come out. And there's not to say that there's not university programs there, but certainly I can say on the manufacturing side, it's really thin to nothing. Right. So if he can get something meaningful there, that could be great for Austin, great for Texas, great for the US. And what bad can come of it?
And so somebody asked on X today, they said, well, would you send your children to his university? My answer was clearly yes, absolutely.
Yeah.
All day long.
And if you think about it, he's probably the greatest he's certainly the greatest capital allocator in current history. He may be of all time. We'll see. History will write that, a couple of decades from now. And so why wouldn't you want to send your kids through that, knowing that when they come out, they probably have a home in the greatest space industry, the greatest space company, the greatest EV AI company, social media. I mean, there's all these different, outlets for them. So,
Right. Yeah. Very cool. All right. Hey, Jeff.
hey, Randy.
So glad to have you co-hosting on Wednesday night's Good News Day. And we'll look forward to having you back about 7 days from now.
Yep. We'll see you. Thanks,
All right.
everyone. Thanks, Randy.
And